easing social restrictions, and some holiday cheer gave the US economy a boost at the end of a year that was plagued literally by COVID 19.
I buy because I like Christmas.
You just fall on things. My husband's bought me the most beautiful pair of earrings.
But even the most festive time of the year was lackluster for businesses in 2020.
The stores are getting sales, but the margins are eroded. They are offering bigger discounts than they ever have before.
All told, the US economy grew 4% in the fourth quarter compared to the previous quarter. That's below market expectations of 4.3%. GDP for the full year contracted 3.5% compared to 2019. The Federal Reserve says the nascent recovery is not nearly enough to compensate for job losses and lost business.
The real unemployment rate is close to 10% if you include people that's the labor force. It's very much appropriate that monetary policy be highly accommodative to support maximum employment and price stability, which is getting inflation back to 2% and averaging 2% over time.
The regulator is keeping interest rates near 0% and will continue buying around $120 billion worth of bonds a month to prop up the economy. But the Fed chairperson says ending the pandemic is necessary for a sustainable recovery.
The path of the economy continues to depend significantly on the course of the virus. A resurgence in recent months in COVID-19 cases, hospitalizations, and deaths is causing great hardship for millions of Americans and is weighing on economic activity and job creation.
The government says it's trying to speed up jabs as well as maintaining financial support for people and businesses. President Joe Biden has unveiled a $1.9 trillion stimulus package, which includes more cash handouts and a freeze on home evictions. But it still needs to be approved by Congress.
Time is of the essence to address this crisis. We're keeping all options open on the table, including using budget reconciliation.
So far, only about 5% of the population has been vaccinated, and a surge in infections and deaths is once again threatening to slow the world's largest economy. Mobin Nasir, TRT World.
Well, for more on this, Matt Maley joins us now from Newton, Massachusetts. He's Managing Director and Equity Strategist at Miller Tabak. Welcome back to the program, Matt. Now, the US economy saw steady growth for the fourth quarter, building on those gains that we saw in the previous three-month period. But we did see an overall contraction for the year of 3.5%. But that doesn't seem so bad, does it, given the fact that the pandemic really shook the economy?
No, it's again excuse me, one of the concerns that people have, of course, is that what's going to happen with these new variants and those types of with the pandemic, and will cause a further shutdown. But however, as you mentioned, things are already a little bit better, and now we're starting to hear more and more issues about people wanting to reopen sooner. Certainly here in Massachusetts, some of those restrictions are definitely coming off, and the same thing in places in New York and other parts around the country. So if the economy can indeed open up, and we don't have any major problem with these new variants of the coronavirus, things are going to do much better. So the big question is going to be, have the markets already priced that in or not?
Interesting. Now, we saw the US government unleash unprecedented stimulus over the course of last year, including a $2 trillion package that was approved last March. We saw a $900 billion deal passed in December. And of course, the US Fed has unleashed its own stimulus as well in the form of a massive bond buying program to the tune of around $120 billion per month. What did that have to do with cushioning the blow?
Oh, well, it's certainly been played a very important part. I mean, it's good. That's good news and bad news. I mean, the problem we do have, I should say, the good news, of course, is that they built this bridge and they extended the bridge so that make sure it would go even further and last even longer. And of course, what the Fed is doing with their massive stimulus, and they keep saying that they're not going to cut back on that anytime soon. That provides a nice a boost for the economy. The one thing, though, is that I think that Chairman Powell talked about yesterday in his comments after their in his press conference was basically saying that we care more about the economy than the markets. That's good news on a long-term basis because they should be less concerned about the markets. But that also means that they might be willing to let interest rates rise a little bit more than people thought. That's long-term interest rates I'm talking about, which they don't control. They can control short-term interest rates, and that they might cut back on some of these programs a little bit sooner than people are thinking. I know that the Fed keeps saying they're not going to do it immediately, and they're not, but they might do it sooner than that people are thinking because they want to let the economy, they want to let inflation run a little bit. They want the economy to do well. They're more concerned about the economy and the markets have already priced in quite a good rebound.
Now, do you believe the United States economic prospects have improved now that we have US President Joe Biden, who has pledged to make tackling the pandemic his #1 priority, as well as propping up the economy?
This is going to sound very strange, but I actually think on a near-term basis, it's going to cause a few more headwinds, because what we usually see from these new presidents is they come in and because they have a bit of a euphoria and a honeymoon for their new administration, and what they do is they tend to do a few things that need to be done that aren't necessarily great for the economy near term, but can be helpful long term. And in terms of his promise about raising some taxes, I don't think that's going to be a major thing that he does, but also some of these regulations. And the thing about these presidents, they don't care about hurting the economy a little bit as long as it's helpful longer term. They don't mind hurting it a little bit on the near term, because all they really care about is back-end loading their stuff so that they can get reelected 4 years from now. I mean, there's this presidential election cycle that happens in the stock market and in the economy, and it doesn't happen by chance. They tend to do their tough things first and back-end load their major stimulus plans, and it really kicks in later on in their administration so they can get reelected. And so therefore, I think this year is going to be a little bit tougher, even though we're going to be coming out of the pandemic, and it's going to be a lot better than last year, certainly. I don't think we're going to reach our full potential, and that's okay because it's going to come later on.
Okay, Matt Maley from Miller Tabak. We'll have to leave it there, but thank you again for joining us on the program.
Thank you.